Welcome everybody to the next episode of KapVista Klips. Today we have the team from Paiid, Ian and Mark. How are you? Nice to have you here.
Thanks,
Hey,
Dan.
Rob.
Good to be here.
Great to meet you.
Awesome. So we're just going to jump straight into it. Tell me the story of Paiid. Obviously we've seen Ian before and we know a bit about his background, but tell me, how did you get here and what's the point?
Yeah, look, I think from a technology perspective, we're in a state of flux right now, right? We're post-pandemic. We've seen the rise of kind of payment methods. We've got Cash App coming out of the US. We've had Stripe have its success. All these new payment methods coming to market. Buy now, pay later, crypto. It just keeps going on and on and on. And consumers are accessing a new payment method every 2 weeks, which is fantastic for consumers. But when you look at merchant acceptance and how a merchant's going to accept those payments, the shocking thing, Dan, is the last payment innovation we had in acceptance was in 2011. I can't even remember what I was doing in 2011.
No.
But I can tell you what advancements we've made. A register, Stripe POS, Square, and then contactless QR payments. 4. We've had 4 innovations since 1999 in payments acceptance. And Until now. And for me as a founder and the premise of Paiid is we're pulling payments acceptance into the future. That's our cause, that's our effect, that's why we exist, to provide innovative acceptance products to merchants globally.
Awesome. So tell us about, how did you get to this point? How did you find yourself in the payments industry first off? What drove you to start a tech company?
Let me give you a little history on the Ian and Mark show. So we met, started dating, if you will, a little over a year ago. I found him. I'd finished up at Afterpay. We had our big exit to block, and I was sitting there with nothing to do. So I thought I'd go and try and find another Australian fintech company to bring over to North America, and met Ian and the team and started looking under the hood, and I was like, hang on a minute, this guys might actually be onto something here. So started working together around commercialization and modeling of what this thing could eventually turn into. And Ian and Alex and the whole team started continually building the platform out. And I looked at it one day and I'm like, these guys have actually figured it out. They're solving problems for the merchant that, frankly, when I was at Afterpay, that we were creating, which is all of these different payment methods, as Ian was saying, have come to market for the consumer, and merchants are like scrambling to keep up with this. Their payments cartridges are just way overcomplicated. If they don't give consumer choice at checkout, the consumer is going to go to another retailer or another merchant. So it's become extremely complicated and very expensive for merchants to manage. And what the guys at have built is something really special that solves a real world problem today. So we decided to get together and do this thing properly.
Awesome. So you're ex Afterpay, you're ex Behemoth. What do you think of the space, and tell us where do you think it's going to go?
That's a great question, and don't hold that all against me. I've been in fintech and growing software companies around the world for, you can probably tell by the grays in my beard, for nearly 20 years. The category continues to amaze me as fintech, but especially in payments. I had this epiphany, if you want to call it that, a few years back. I was like, oh, we should just follow the money. And then I was like, of course, follow the money and figure out how to get people paid. And that's where this all sort of came from, was get paid. Everybody needs to get paid. If you can't get paid as a business, you don't have a business. And the category continues to grow and evolve, and I believe what we've built here is a fantastic foundation for us to sort of help bring merchants into the third horizon of payments, part A. And then part B, what it's giving us is a tremendous foundation to continue the innovation and Ian's mad scientist work that he does, to continue to do that into the future. Things like, and Ian's much better to tell you about all this stuff than I am, but biometric payments and how we're going to do that with partners like Visa, and getting into IoT so that you can drive through Starbucks in your car and pay for your coffee with your car, and some really cool stuff like that. So, you know, it's what we've seen. Consumers have driven it as a change. Merchants have been scrambling to keep up, and it's costing them a fortune with inflation and all the other macroeconomic conditions that we're handling right now. We can't continue to afford to pay the rates that we're paying and the maintenance that we're paying as merchants for our payment ecosystem today. And Paiid is a real answer to solving those problems. So I see the future is a single relationship with a single integration to a single platform for merchants, offering them an array of payment options for their consumers, and taking all of that really difficult back-end stuff that payments creates from your acquiring and your AML and KYC and risk and all that sort of stuff. We take that away from the merchant. They don't need to do it. They need to go and take care of their customers. That's where I see all this going.
And I guess, Dan, if you look at the broader market, right, and I coin it as 3 horizons, and I'm pretty adamant on my kind of thesis around this. The first horizon we had was click, clack, and magstripe, right? I remember being working in a bottle shop at 15, which at 15 now is a complete rarity because, good God, people would have a heart attack. But I remember doing carbon copies, right? Like you'd get a credit card, you'd put it in, you put the carbon copy, click, clack. Then we moved to magstripe, right? Cool, we've got these magnetic strips on cards. Then jump forward into the second horizon. It all becomes contactless or wearables, right? We had our Apple Watches that were enabled with Apple Pay. We've got, you know, contactless cards, contactless wallets. You know, we've got this experience. Where it's moving to in the third horizon is full democratization. And what I mean by democratization is I mean seamless flows of payments, regardless of the device or the opportunity. Now we've got tap on phone or tap to phone. So we're not only considering consumers tapping onto a merchant's phone, but we're also considering consumers being able to tap onto their own device, checking out a checkout, or they scan a QR code, they can just tap their card or click out with Apple Pay directly on their device. We're looking at IoT, as Mark mentioned, and you know, interoperability of IoT is your car. But what it also is, you know, if you catch public transport and you're standing at a billboard, enabling billboards to be able to accept payments and say, wow, I really like that. Bang, hit your card. It's delivered directly to your home. Seamless commerce is where we're moving. And the final piece that's really interesting for me as you know, sitting on the product and the innovation side is biometric. We're starting to see it happen in the larger institutions with, you know, opening up your account. You know, my voice confirms my identity. I've said it at ANZ 1,000 times. But when you take that technology and you harness it and actually commercialize it for the broader market, it becomes incredibly valuable. And, you know, biometrics is a cornerstone of our product roadmap because I see that as a true democratization of payments. At Woolies, how many times have, and I know that you've got kids and I've got a baby, had my little son in my arm and I'm trying to get my phone out of my pocket, right? Yeah. Well, he's grabbed it and I'm like, it's a pain in the bum.
Yeah.
But simply scan your face, your cards are registered, tokenizes your face, it's secure. And you think about the capacity and the capability that this offers to reduce fraudulent payments, which makes up, you know, hundreds of billions of dollars online out in the world today. It's pretty hard to fake someone's face. The biometric data and the tokenization, not only the technology coupled together, you're eliminating fraud for the broader kind of merchant ecosystem, reducing chargebacks, increasing revenue. And that's what it's all about. So I think the next growth phase for Paiid is really exciting beyond the products that we've got now. You know, put on my mad scientist hat, and I see that interoperability piece as being a huge cornerstone to consumer and merchant payments, not only, you know, in Western markets, but you know, new markets as it opens up.
Yeah. So obviously we've seen Ian before with FinPay. So tell us the story of how you know Paiid has come. This is a new entity. What's the history there?
Yeah, look, from a FinPay perspective, you know, we're a small country, right? We're Australia. We're here in the bottom of the world. You know, we're incredibly digitally native. We're one of the most financially regulated countries. from a a compliance perspective. So a great test bed for fintech, right? You see a lot of great Australian fintechs come out of Australia. But when you look at the broader market, it's incredibly difficult to scale beyond our country.
Yeah.
You either have to be a publicly listed company, say Afterpay or Zip, and those guys, and we've seen, the various kind of market sentiment towards them. Or it's a really hard slog and you kind of get into this chasm where, you may not survive. Mark approached us with an opportunity to basically merge and acquire our businesses together, or merge our businesses together. And for me as a founder, I welcome that with open arms. My goal as a founder, and I'm sure that Mark is aligned, is to build great product, to have a great team, and build something that the world remembers and wants to remember, and will be beneficial for the greater good. And I think, that's what Paiid's all about. It's not the ruthless fintech that's there to make payments and, do all that type of stuff like the mob, quote unquote. It's about being beneficial to the market and providing value, which I think has been a little bit lost in the past. So, looking at our fundamentals and our core beliefs, that's where we sit and that's what we want to offer. And Mark, you can probably add to that, but that's my lovely version.
I think that was great. If we can help merchants get paid by the way that consumers want to pay them for their services or their goods, in turn, they can hire more people. We can put more money back into the economy, which God knows it needs it right now. And we can create something meaningful by following the money, by helping merchants get paid, and that's the core of what we're doing, is creating a meaningful company.
So already you're starting off with an Aussie success story. You're expanded into a new market. There is a joint venture acquisition, and now you're hopefully changing the game for merchants, providing a key piece of innovation that hasn't been seen since 2011. So changing what's happening, which is exciting. Tell us more about putting my consumer hat on. I've got an e-commerce platform. Tell me more about the solution. How does it work?
Yeah. So look, if you've ever integrated a payment flow into your e-commerce store, it's generally been a pain in the ass. And from a number of factors. The onboarding process. You've had to hand over documents that you probably had to go back through the archives and blow the dust off to try and find, right? Mm-hmm. And you've got to scan them, you've got to get them certified or whatever it may be, right? I think, in that same token, we've digitized this entire experience. We're not just providing a thin veiled piece of architecture that's obscure, that only developers know how to use. That's not the idea. The idea is that everybody can pick it up if you're a business owner and use it effectively to help your business grow. So onboarding, we've digitized that entire experience. 3 minutes, you're in, you're out, you submit your documents, you take a photo of your face, we do the biometrics and the ocular recognition, we certify your documents digitally from a vast array of data registries. You get your API keys, you're into a sandbox and you're testing. On the front end of that, from a consumer perspective, there's no more checkout spaghetti. I have witnessed more times than not on websites where you check in and the cartridge is almost, you've got to scroll. Mm-hmm. When is that? This is the issue, is that behind that, a merchant has to have 27 different relationships with 27 different account managers, with 27 different customer support lines that they have to call, and 27 different platforms that they've got to manage and log in and reconcile. What a pain in the ass. For us, it's one platform, one integration, one relationship. We manage all of that burden that they can focus on their business. The added advantage of this, Dan, is that also the power of the dashboard and the platform is they're able to turn off integrations if they wish and turn them back on. So say if they want to run a promotion for a 20% off for people that are going to use Binance Pay, for example. Yeah. They can log in, turn Binance Pay on, run the promotion. And if they don't want to run it again, they can turn it off and it disappears from their cartridge. It's giving power and capability to merchants to be able to run their payments orchestration and infrastructure the way that they wish. Like, it's a simple choice. And all of a sudden it became incredibly confused to say, you have to accept this or you're going to lose business. When has that ever been the case? it's a blatant lie, to be honest. So giving them the power to be able to kind of run their payments the way that they want has been critical to our success and our growth and our experience and our conversations with not only investors but consumers and merchants throughout our journey.
Just one other quick thing to add to that too, Ian. You know, you're a small business owner, Gen Y, Gen Z, small business owner, trying to get started. You haven't got a 20-year credit history. You haven't got, you know, been in business for 10, 15 years. You know, for you to get a payments relationship going, it's typically very complicated, very difficult, takes a long time. And then all of a sudden you can turn around, that's turned off because some rule has changed somewhere in Stripe's rule playbook. And all of a sudden, a whole bunch of these small businesses have been turned off from their credit card processing abilities or whatever the case may be. So we're really building this not just for, you know, companies that have been around for a while, but companies that are trying to get started, folks that are trying to lift up a small retail location so they can sell their bespoke jewelry, or do their landscaping services, or you know, have their coffee shop locations across the city. You know, we're really looking at it not just from up here, but really down to this small business owner as well. And we believe that what we've built, because of the simplicity of it, because we've got the ability to do omni-channel payments, which is a very unique thing as well. So meaning you can do it online payments, or you can do in-person payments through any smartphone. It means that we've simplified that entire experience for the merchants so they can focus on actually doing some sales and launching their business and getting some customers.
Yeah. And funnily enough, man, there's an interesting stat for you, right? 9 out of 10 people would rather go to the dentist than go and get financial products from their bank because of this process.
Yeah.
And I hate the dentist, but I'd rather go to the dentist than go to the bank, right? I tried to open a business account the other day and I had to wait for an appointment for 2 weeks. Like, come on, guys, really?
Yeah. Especially in Australia, as you said, it's one of the toughest regulations, highest regulations in the world. It is crazy. Just mentioning that with Stripe, if anybody has had to set up with Stripe, you think it's a payment gateway, it should be easy. You press a few buttons and you should get it. It's not. You have to apply. Having been through it with one of my other businesses, I had to submit all these documents, I had to prove who I was and my network and everything else like that, and share my ID. Even they wanted my LinkedIn profile and everything to prove that I actually had a business to go through it. And I'm like, well, what is it? I just want to use your service to accept payments. That's it. I'm not asking you to go to the formal with me. I'm not asking you to go guarantor for my home loan. Like, I just didn't get it. They wanted to know everything. So it was an incredibly difficult process.
You know who hasn't done a terrible job of it, Dan, is the guys over at Square. They haven't done a terrible job of it from a small business perspective. But what's happened and the way that they've evolved with their acquisition of Afterpay and Cash App over here and whatnot, they've really narrowed down the payment options for consumers to pay that merchant. So if you're a Square merchant, you're dedicated to that mission, you can only have traditional cards. If you want buy now, pay later, you can only have Afterpay. If you want to do digital wallets, you can only do Cash App. So it's really narrowing those options. They've done a great job to this stage, but I think there's a long way for this category to go to empower these merchants with ease of use and acceptance of payments. And again, what I believe we've built here enables that and is built for the merchant.
Yeah, well, it's definitely exciting. Fintech is a hot industry. From an investment and growth point of view, it's always hot. Investors are always looking at it, and there is a lot that can be done as we are a digitizing society, and everybody's going digital. There's a lot can be done, but on the merchant side, it's lacking. It is
big opportunity.
Yeah, it's a huge opportunity. So tell me about the the offer. You know, you're raising capital. Tell me about the rate, how much you're raising, what's it being used for, and the momentum. And then also to give us an idea of what stage you're at. Give us an idea of your momentum company wise.
Absolutely. So what we've done, and feel free to chirp in any point, but what we've really done here is set a fantastic foundation. Acquiring the FinPay, some assets and combining it together, and merging the teams together with Paiid. What it's done is it's opened up a global market opportunity for us using a fantastic foundation that's been built in Australia with a really good piece of tech. What we have is an opportunity in front of us for a $20 million raise. We're going to use that purely for growth cap. So we're looking at going out and focusing entire teams on merchant acquisition in the US, in Canada, and continued work in Australia. And then subsequently, we're going to start to look at some other markets in Asia. We're looking at continuing our product and innovation organization, scaling out more than what we're doing today. We want to rebuild our e-commerce platform so that it's more globally available and secure. We want to make sure that we take advantage of opportunities with our partners that we're bringing on board. For example, the biometric work that we're looking at building, the IoT work that the mad scientist Ian Park is looking at rolling out. He needs some funding for that. We're looking at building out a operational organization for North America out here in Vancouver, so that we can support merchants in time zone here as well as out of Australia. So we've got to follow the sun model. And then finally, we're going to keep our eyes open for any other acquisition or merging opportunities that come up over the course of the next couple of years, because they will. There's smart founders out there, there's technical founders that build really, really smart tech that is ripe for commercialization. And if we have a great merchant base to work from, those types of opportunities will absolutely be investigated.
Yeah. So just touching on that, what's your merchant base that you're currently working with? I know you've had a lot of traction, but give us an idea of what you're working with, and then how does that relate into what stage you're at in terms of the raise?
Ian, do you want to run with that one?
Yeah, so key distribution channels and partners, Dan, great question. So we've currently got about 3 existing distribution channels that we work with. One is a subsequent kind of payment tech company out of Australia here called Atlas Payments. They are looking to bolster and bring in a card present or an in-store solution to their market opportunity. The second one we've got is Avro, and they're an AML KYC company out of Massachusetts. And excuse me, that's one of the words I've always struggled to say in my life, Massachusetts, but we got there. Basically, they're an AML KYC vendor, but they basically onboard the clients before they would come to us. So we've got a long laundry list of pre-approved merchants ready to rock and roll to deploy solutions to in the US. So we're talking about 100,000 merchants in the US and another 250,000 merchants globally. The other existing kind of distribution channels that we've got, there's bill providers, bill payers, aggregators. There's also our existing payments partners that we have that we're going to cross-pollinate and share a merchant base with. So, one of the joys, I suppose, Dan, to just dig into that really quickly is the existing payments partners that we've got have all identified that merchant acquisition is a struggle for them because they're all competing against each other, right? But with us, because we're an aggregator and we combine all of them together, we really take all of that off their plate. So they can focus on their consumers, we focus on the merchants, and we bring them together in the middle. Match made in heaven, right? So, working at that, we're working with merchant bases of well over 1 million within the next 12 months, which is really exciting for us as a growth journey. And we'll continue that growth as we get into certain segments, find additional payments partners, and service our merchant base even deeper with product functionality and improvements as we grow.
We've actually, in one of our financial models, you'll find it in the data room, we've actually got the more new payment methods we add, our net transaction revenue increases without adding new merchants. So as Ian and the team continue to add more payment methods from around the world, our revenue will go up on the same base of merchants, which is a really interesting model. To add, the only other thing I'd add to Ian's comment there would be around a partnership with Visa. So we're a launch partner for Tap to Phone in the US, Canada, and Australia with Visa. It's extremely exciting. Lots of news to come out about that in Q1 next year. It's going to be advertisements, co-marketing pushes, and all kinds of fun stuff that you can imagine a big behemoth like Visa would have, as well as some other pretty exciting opportunities we've got on the books.
That's awesome. Okay, so we'll wrap it up. I won't take too much more of your time, but you're raising $20 million. You have global distribution, 350,000 merchants, and looking to reach 1 million merchants by within the next 12 months, which is very, very exciting. Anything else that you want to add? Anything that you think is worthwhile to our audience?
I have one thing, Dan, and I guess it's looking at current market sentiment, right? And we had a bit of a discussion about that before we jumped on this. Profitability, right, is always a question that is asked. And we have a very strong path to profitability. And Mark and I come from very traditional company backgrounds, right? We have fundamentals. We're not burning cash. It's not growth at any cost. It's about providing fundamental and strategic growth to the business. And our path to profitability leads us into Q1 2024. So that's what we've modeled. That's what we'll hit. That's our KPI. We're not backing away from that. Exciting times.
All right, so we'll leave it at that. Thank you very much for jumping on. It's been great to chat. I'm being an ex-finance professional, I understand it. I get it. It makes me excited. But most people, anybody who's run a small business or an e-commerce platform or any type of business knows the pain points that you're trying to solve. So it's certainly an exciting space. But thank you very much, guys, for jumping on, and hopefully we see more from you.
Thanks Dan. So much, man. It's been a pleasure.
Bye.